Morning, everyone, and welcome to this morning's edition of the MPC Markets Morning Call. First time we're streaming this as well. It's 28th of August, 2025. Headline today, Nvidia beats, but shares fall as investors get valuation vertigo. So it was not a bad result from Nvidia overall, but it slightly missed due to there being no H20 chip sales in there, and there's no forecast for it. They did halt manufacturing on that. They told their supplier to halt about a week ago. So, but we will cover that in more detail in just a moment. Just looking at equity indexes overall, it's been a very quiet week. The ASX eking out a small gain yesterday, which is fairly impressive given the inflation number. Energy prices caused the monthly inflation number to spike higher, and that's really going to put the brakes on any form of aggressive rate cut cycle. I think they'll probably sit pat now for a little bit, and they don't have the benefit of as the US does of installing their own commissioner of Bureau on Labour Statistics like Trump does. Nikkei eked out a small gain yesterday as well. China stocks were a little bit lower, although the A50 had a fairly decent 5-day run. The Russell is up about 5% for the week. It was, again, the strongest, but that smaller mid-cap part of the market really attracting a fair bit of attention as people are putting two and two together and realising that with all the the firings and political pressure from Trump to get interest rates down, it's likely going to happen by any means necessary, and that really does benefit that smaller part of the market overall. And there's a fair few questions around valuations, and I think the price action in Nvidia today is pretty reflective of that. The last 5 or 6 earnings in a row, or quarters in a row for Nvidia earnings, this sort of result would have sparked a 5 to 10% rally. And I think things are a lot clearer now with Nvidia, and they're still forecasting incredible revenue growth and incredible growth. I was a naysayer on this stock in the beginning, and thought it might be a little bit of a Cisco from back in 2001. Probably more so distrust of the analysts. I think everyone was copying each other's homework than anything else, but we use a lot of AI here at MPC Markets, and the more we used it, the more I understood it, and the deeper I dug into Nvidia and how tight their ecosystem is in terms of making their customers sticky, etc. It really brought me to the conclusion that, and Jensen even said himself, I don't want to be another Cisco, and basically go on the back of one or two products that have no moat, and he's formed that moat with that ecosystem. So as you can see, Nvidia was about flat leading into the numbers, down about 2.5% as of 20 past. It's still trading around about that as of now. We're 10 minutes past 8. And we've got, and I think Apple is probably more of it what the market views a bit of a defensive at the moment. But looking at the heat map here, not a huge amount of action. There was, the oil companies were up a little bit as inventories diminished in the States, pushing oil prices a little bit higher. You probably really see a little bit more of those defensive names potentially. We will have a quick look at Nvidia. In here, we've got the income statement. Thanks to App Economy Insights for these wonderful graphics that I steal. But yeah, I love these flow charts here. And look, I mean, margin up 1 basis point, gross profit up 3, operating profit up 1. I mean, this company started as a gaming company, so you can understand why now that they've had such a skyrocketing share price, and as yesterday's infographic showed on Nvidia pre-earnings was, as long as when we've shown one on Palantir before as well, as long as the revenue growth matches, and they maintain their profit margins, there's sort of unlimited upside in terms of that. But we're trillions of dollars now for market cap for this thing, and it brings into question, I mean, how much money is left to be spent, because at 4 or 5 trillion odd market cap, realistically, I mean, there's only so much money in the world until they start printing in about 6 months' time again. And they probably can't, just their sheer size and saturation, they probably can't get maintain these 50% year on year revenue growths. But it still doesn't mean it's not going to be it doesn't mean it's a bad company, that's for sure. So I mean, forward, I've got a couple of stats here. Triple digit revenue growth. So FY 2025 revenue soared 114%, basically. Gross margins great, earnings beat, and their guidance was increased as well, and it's up about 34% in the last 3 months. We bought this back in April in the dip. It was one that I, famously and embarrassingly called, the potential poster boy for the AI bubble. But one thing I learned from trading in 25 years of day trading was don't be afraid to give yourself an uppercut and change your mind. And we did, and we bought that on that dip, both on the carry trade dip and then in the April dip as well. So looking at the price action at the moment, and I would like to see another couple of days price action potentially. We would maybe be considering trimming, despite the fact that we still think it's a great company and a long-term buy. As you can see here, PEG ratio of 0.89. I mean, for ASX investors, like you've got I think the PEG ratios are, and one is fair value, so it's slightly undervalued. And it's based on forward earnings growth. The likes of CBA, Wesfarmers, and JB Hi-Fi are 3 and above, which is like extreme overvaluation. So if you're going to pick a play for what we call the mindless green robot, that passive ETF index flow that attracts all that money in by default, Nvidia is certainly our pick there. Whereas in Australia, I think it's already that just weight of long-term super money has just pushed our bigger and our larger cap names that aren't particularly cyclical like those guys to extreme valuations. So they are doing a new buyback, 60 billion share purchase. So that's obviously how the US tends to deliver capital back to shareholders rather than dividends. A little bit different in Australia. We tend to do dividends and franking, but they're still maintaining a dividend. The dividend's minimal. They paid 14 years straight, even before the AI boom. For a PE of 41's pretty hefty, but again, if it justifies it via the PEG ratio, it's fine. The H20 chips was the big source of conjecture. Basically, there was no revenue in there for this quarter. There was none projected for next quarter, and they have halted manufacturing on that because there is an extra 15% has to go to the government, and then with the US government stepping in and buying chunks of Intel, for instance, it was assumed that AMD and Nvidia would be the next on the target list. Nvidia said it would essentially take legal action on behalf of its shareholders, which has scared people off a little bit. And I think that might have a bit to do with the fact that we're down 2.5 overall, because I think they would have significantly beat had the H20 chips been shipping. And Jensen's pushback, or Nvidia shareholders' pushback, of being not nationalised, because they're not. It's not like they're taking a significant stake. It'd be 10 to 15%. Where they get the money from, God knows. As I said, I'll print more money. But the resistance to that obviously is going to halt that revenue coming in. So there is, it might be a little bit frothy in terms of valuation with forward PE, but look, if you're looking a little bit more long term, getting into China, as long as they do a decent deal with the government, I don't think it's unfair for the government to be asking for a clip on this. The margins are enormous for all of the Mag 7, and I think on average they pay like something like a 14% tax rate. So, and they get subsidies and God knows what. And so, I mean, clipping a ticket a little bit on these guys because their margins have just expanded, and the government and the US government debt has just absolutely exploded, and it's a pretty obvious part of what's going on there, and it's fairly unsustainable at this, in terms of the government debt. So. Look, today we've got Wesfarmers. IGO's reported as already this morning. Well, I mean, the shares have been beaten down, but net loss after tax of $955 million for the 2025 financial year, down from a $3 million profit. Impairments, weak commodity, hitting markets there. That may take the wind out of the sail a little bit of, that lithium sector. Nickel's obviously been, a bit of a horror show for the last couple of years as well. But and you've got some of the, Sandfire, Eagers, etc. So, and I think South 32 as well. So we tonight in the US we've got preliminary GDP. That's just a revision of the advanced GDP numbers from last month, and then the same here in the core PCE. So you don't generally see too much volatility around those numbers, although it was a very high number last month on the advanced number. I would fully expect that to probably be revised a little bit lower overall. We're coming into a long weekend for the States. It's Labor Day on Monday, so expect the end of the week to be relatively quiet. And look, there's a couple of earnings tonight: Marvell, Dell, and Autodesk. Autodesk is one we keep quite an eye on, and Marvell as well. Great company, and currently one of our global alpha recs, and as well. So, yeah, we'll expect fairly decent earnings. So the likes of Autodesk is one of those ones that we've done a lot of analysis on in the past. It really is at that efficiency end. It's using AI. It used to be an engineering and CAD company, computer automated design, and might be one of those sort of first beneficiaries from AI being able to, help construction engineering, design work, etc., and doing tens of thousands of hours worth of human work in just a couple of hours. So we expect good things out of those guys, long term, because as they could be an early monetizer. So just having a quick look at commodities and currencies. Gold was slightly up still. And it looks fairly positive overall. Silver was flat. Copper was down a little bit. But there's not too much movement in the commodities this week. I think it's going to be I've been saying this all week, it's a fairly quiet market. I would say until payrolls next week on Friday the 5th. That's what we're all waiting for to get a bit of a view on how the economy's faring. And crude was up a little bit, as I said before, on that lower weekly inventories number. Coal hit, haven't seen any headlines on that, but down, giving back. But coal's been in a very tight range for quite a long period of time now. Lithium continued its recovery. I don't want to call it a rally. Uranium gave back a bit of its gains from this week. But look, Trump was certainly hammering renewables and etc., and really giving the the thumbs up to nuclear and natural gas and oil and coal actually in the last couple of days. So you've seen that rally in uranium really pick up. We've been looking the small modular reactor space in the development there. There's a couple of really good companies there as well. Pretty uneventful week for Bitcoin as well. That's to be down only 2% for the week and have a 1% range. It's starting to get old and boring, Bitcoin. The crypto bros will be super upset. So an Aussie dollar just climbing a little bit higher. That'll be on the back of the we would have to pare back interest rate cut expectations now, and I think they're they're hyping up interest rate cut hopes in the US. So that should be good for the Aussie dollar overall, and we'll probably see some resilience there. But that wraps up this morning's MPC Markets Morning Call. I hope you enjoyed it, and we'll be streaming this around the 8:30 mark every morning. And go to our website, mpcmarkets.com.au, to find out more. Cheers. General advice warning. The content presented in this presentation is intended for informational purposes only and provides general advice only. It does not take into account your personal objectives, financial situation, or specific needs. This information should not be the sole resource when making investment decisions. We strongly recommend you seek the advice of a financial professional.